everyone. Thanks for joining in. Just a quick sound check and then we can get started. Alright, last day of November. December starts tomorrow. Audio seems a bit funny, just give me 1 second.
Okay, sound check 1, 2, 3. Okay, test 1, 2, 3. Okay, sound seems to be normal on my side. That was hilarious. Anyway, it's like I was on helium or something. Alright, just a quick general advice and risk warning disclaimer, and then we can get started. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account any particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay. So, I think what we need to take a look at would be the euro first. Okay. All right. Okay, let's talk about euro. We've got German CPI number, flash CPI number yesterday. That was a little bit lower. We got France today, pretty much the same, unchanged, 6.2%. Italian GDP growth, not really. Italian inflation rate, 11.8%, slightly higher than what the market was expecting at 11.3%. So France, Italy, unchanged. Germany dropped down. The overall Eurozone flash CPI number actually went down a lot. It was 10.6%. Expectation was 10.4%. It's now at 10%. So this is a little bit of a mixed bag. Let me just talk a little bit about the CPI number that I think a lot of people are actually waiting for. So December 15th, the ECB is about to hike rates again. Okay, so the discussion is pretty much the same as with the FOMC. Are they going to go with another 75 basis points, or are they just going to go down with to 50 basis points? They are going to hike rates regardless. So that's something to take a look at. Inflation rate, it's still high. Okay, it's below what the market expected today. Okay, expectation was 10.4%. It drops down a lot more at 10%. But this is just one drop. That's not a sign that, the inflation is gone. You know, if ECB can actually slow down in terms of their rate hikes, that's the thing, right? That's what's going to turn the euro bearish or bullish. Okay. So we've got the year-on-year inflation down to 10%. It's still very high. 10% inflation is still very high. The core inflation, if we take a look at the core inflation number, is actually unchanged at 5%. So, excluding excluding energy, the core inflation is actually pretty flat. So, food prices are still going up. The energy prices might be going down a little bit. So that's what's bringing the headline inflation down. But if we take a look at the core inflation, it's unchanged at 5%. So inflation issue is still there. The problem with tonight is actually how to actually, what to take away from the Eurozone CPI numbers here. That's going to be the question, right? We've got, on one hand, we have inflation dropping down. So that would say the ECB should be slowing down in terms of their rate hikes. And then on the other hand, inflation is still high. core inflation is still pretty much unchanged. Should ECB hike by another 75 basis points? Now, this is basically what's being contested tonight, and that's probably why you actually look at the Euro USD. What's going on? It's really flat, nothing much, right? So we discussed the Euro USD on Monday. I pretty much point this out on the outlook that we're likely going to be looking at a more of a range-bound market condition across all the major currencies. That's still the case. I was actually really worried on Monday because we had the euro rally up. We got oil dropping down. I was actually I was worried that the weekly outlook would just become useless, not even 24 hours in. Okay, that's not going to be the case. We're still looking at a more of a range-bound market condition on the Euro USD. Key resistances, 1.05 obviously key. Even 1.0450 and 1.04 are still going to be key resistance for the Euro USD. So right now, what are we anticipating on the Euro USD? If we take a look at the daily time frame, we are looking more for range-bound market condition. And the only way we can navigate through this is that we've got 1.0250 as the support, 1.0350 as kind of the midline or the pivot for this week, and then we've got resistances at 1.0450 and 1.05. So it translates to basically, if you want to trade this week, trade within those range, right? And that's basically what's been happening on the Euro USD. Now there are a lot of questions on the Euro USD here. You know, the stochastics is confusing us and stuff like that. I posted an article in the Telegram channel. I know it's in Bahasa Indonesia. I'll be posting out the one in English tonight. Okay, but right now we're monitoring the momentum on the Euro USD. If we are going to be trading intraday wise, then it's much better to switch into the RSI instead of using the stochastics. Not saying that stochastics is not going to be useful. It's just that there's a little bit of a lag here on the stochastics. Now, the question on the Euro USD intraday wise, what is the potential direction for the Euro USD? Right now, we basically went below 1.03, 1.0350 last night. Right now, what the market is attempting to do is a little bit of a correction. Sorry. So right now, in terms of the movement intraday wise, you need to be a little bit more careful because it's very tempting right now to actually go long on the Euro USD on the assumption that the correction is done. The correction is pretty much it's halfway done, right? We don't actually have a strong confirmation that the correction is pretty much done. We basically need to see the hourly close back up above 1.04 today to assume that the correction at 1.0, support at 1.0350, it's confirmed. We don't have that yet. Price is actually still hovering around 1.0350. Now, in terms of downside target for the Euro USD, for those that still has a position from Monday or went short on the rejection or around 1.05, assuming that you were short Euro USD, you're probably thinking, should I get out of that trade? Or if you're new, you don't have a position right now, you're thinking, should I go long on the Euro USD? And I'm here to kind of break this down to you right now. At least on an intraday scale, this is still below the Ichimoku cloud, right? That's number one. So we're still looking at a little bit more push to the downside. That's still possible here on the Euro USD. If we're looking at it, purely on a price level, we're not looking at momentum or anything like that. You actually still have a little bit of a resistance trend line. So basically, if you take a look at the chart here on an intraday scale, price actually needs to close above 1.0380 to initiate a long trade on the Euro USD. But as long as it's below 1.0380, which is in line with the 78.6%, okay, then there's actually still room for this one to push even lower, potentially towards closer towards 1.03, which is around 127.2. Now, if you take a look at where the 161.8% is, it's actually very close to 1.0250. Therefore, we assume that the range for this week it's is still valid. if you're wondering what that range is, it's basically between 1.0250 to about 1.05, 1.0450. Let's take 1.0450. This was the range that I was talking about on Monday. Now, if we assume the current range is still valid, right, then I don't actually anticipate any push higher towards 1.05 at this point in time, especially with the market waiting for Jay Powell to say something tonight. We've got ADP coming out in basically an hour's time. Jolt's number, I don't think ADP and Jolt's number are really key, but what Jay Powell is going to be saying today, I think that's going to be key, because that's going to give us a little bit of an insight. I think this is going to be the time when he's going to give us an insight before the next FOMC meeting. If they're happy with the lower than expected CPI that was posted out, are they going to stay with what they discussed during the FOMC meeting? And we had the minutes published last week. So we'll see what Jay Powell says. I think that's really key tonight. And then obviously we've got NFP numbers and the unemployment numbers from the US, right? So Eurozone side, we're done. I think there's going to be a little bit of confusion right now in the market, what to take out of this, right? But I think you probably need to consider that the market would assume, even though the inflation is still high, but the inflation does drop down a little bit, all right, from 10.6% to 10%, below market expectation. And then, we've got ECB economists really debating about whether they should slow it down to 50 basis points or are they still going to go with 75 basis points. So it doesn't really look that great for the euro at this point in time, especially ahead of the Jay Powell speech tonight. Okay, today, depending on where you're from. Right. So anyway, 1.0250, it's in line with the 161.8% on the hourly time frame. Can we draw a new fib on this one? We could, but this fib is still valid at this point in time until we actually manages to close above 1.0380 to 1.04. Now, intraday wise, if you're wondering, in terms of resistance for the Euro USD, this is going to be your block of resistance. It's basically just about 20 pips, right? If we see price attempts to break it, this could be what's likely going to happen, right? That's one scenario. I prefer to actually see a close below 1.0350 for a move back towards 1.03 and 1.0250. Okay. So right now it's in the middle. You're pretty much in the middle right now. If you try to make a decision right now, it's about 50-50 in terms of probability at this point in time because we are hovering around the pivot level. If you have a short position from Monday, for example, because I know some of you guys have that short position, some of you probably overstate in that short position, you should be moving your stop losses down to about this high, around 1.04. Okay? So for those wondering, am I still in on that short position on the Euro USD? No, I'm already out, pretty much clean out. But if you guys are going to be targeting that 161.8%, I think it's a good time for you to start moving your stop losses from up there to about down there. So lock in about 100 pips if you want to. You can let the trade run because you're not really risking too much right now. The market's pulled back, close to that stop loss anyway. So it's much better to just move your stop loss to about 1.04 if you want to keep your short position. If you're thinking of going in short on the Euro USD again, you could go short if price breaks below 1.0350. You could have your stop loss about 1.0380 or put it a little bit higher to around 1.0390. In terms of target level, your initial target level is going to be about 1.0306 or 1.03. It depends on what you want. All right, risk reward ratio is not that great, but it's not really that off. It's still about 1-to-1. Okay. But if the momentum builds up, and we want to talk a little bit more about that momentum, it could potentially go back all the way down to 1.0250. At this point in time, the risk reward ratio is going to be 1 to 2. This could be a good time to actually scale in on your trade. Now, should we take a look at the intraday momentum on this one? Which one should we take in first? Let's discuss it from the RSI perspective. If we see the RSI right now, price is actually between 60 and 40. Okay, if it fails at 60, if it's unable to close above 60, then it's likely going to be pushed lower. Okay, now if we take a look at the stochastics, this is already crossing right now. So yeah, probability is actually going to be a lot higher for the Euro USD to go down. Now, the preferred scenario, obviously, if I'm saying this and looking at the fundamentals on the CPI numbers and stuff like that, we break it down. Obviously, I got time to actually look at it. It's not super positive for the euro. If the inflation came in at 11%, the euro would be above 1.05 at this point in time. So we've got core CPI that's actually flat, year-on-year CPI that went down. But if we break it down, take away the energy costs that's really pushing the inflation up, we actually have real cost of living that goes up in the Eurozone. So I think there's a little bit of a clash between the core CPI and the year-on-year CPI, right? With everything included. I much prefer a short on the euro. But again, a little bit too early to call right now. I need to see an hourly close below 1.0350 for us to actually determine a potential short on this one. The other scenario is, what if price breaks above 1.0380? Okay, if it does break above that resistance trend line that we have, which is really, really flat, we can just assume it's actually 10380. If price breaks above 10380, okay, your stop loss, your minimum stop loss is going to be about 50 pips, around 1.0335. I would much prefer to have it lower, around 1.0320. Now, in terms of target level, this is a little bit unknown, but you technically cannot go above 1.05 yet, okay, because we're still looking at the range established. So if we go long, there's actually a bigger risk involved. In terms of risk reward ratio, it's going to be a little bit tough. From a technical standpoint, it's also going to be a little bit tough because we could actually not surpass 1.04, even though it breaks above 1.0380. Okay, so this is the risk I'm talking about. If that's going to be the case, then your risk reward ratio is going to be really, really bad. You're risking 3 times your potential gain. So I don't like looking for a long on the Euro USD, not at this point in time, not until the NFP is passed and over, or at least not until Jay Powell says something. Because Jay Powell could say, we've taken a look at the CPI number, it's fallen off a little bit, but we're still going to be hiking interest rate. Inflation is still high. If this is mentioned tonight, that's going to drive the US stronger. Okay, you need to consider this, even though you don't follow fundamentals. But I'm just, because this is going to be a little bit tough. We don't have any firm data to look at. Again, if we take a look at speeches, that's going to be qualitative. This is going to be new to the market. If Jay Powell says, just keep this in mind if you're keeping an eye out on the market. I'll post an update on the Telegram channel. But just in case you're not in the Telegram channel, tonight, if Jay Powell says something about the CPI numbers, he would probably say CPI has fallen back down, but the inflation is still high. We're still going to be hiking interest rate. We might slow down the pace of interest rate hikes. That's already been priced into the market, but I doubt he'll say that. Okay, but I think for sure he's going to say one data is not enough to to confirm that the inflation has gone down. It's time for us to loosen up a little bit. I think that he's not going to say that. He's probably going to say one data is not good enough. We're still in the process of bringing inflation down. We're still going to be hiking interest rates. Okay, so what we're looking for is actually clues about whether he's actually going to slow it down. So if he says something about slowing the pace of interest rate hikes, This is dollar negative. If he didn't mention this tonight and he mentioned the first two, then this is going to be good for the US dollar. It could send the euro crashing. So the Jay Powell speech tonight is actually pretty important because we're going into December. This is pretty much the end of the year. This is going to be the last FOMC meeting for the year. So it'll change a lot of stuff. 2:30 a.m. again. Yeah, for some of us that speech comes in the middle of the night. I'm okay with that. I'm still up working, so I'm actually pretty okay with that. Okay. Anyway, that's for the Euro USD. Which one do I prefer? I prefer a potential short on the Euro USD, not because that I'm pro short on this one. I'm just being a little bit more realistic. We might be a little bit capped off in terms of how far it can go up. There's a lot more resistances to the upside than it is to the downside for the Euro USD. So you need to pay close attention to 1.04 and then 1.0450 and then 1.05. Even if you go for that 1.05, your risk reward ratio compared to the previous one, it's better on the previous one. The amount of pips is going to be the same because we're in the middle of the range, right? If it goes up, you're probably going to net very close to 100 pips. If it goes down, you're also going to net very close to 100 pips. You're actually in the middle right now for the Euro USD. So, but between the two, I think there's a lot more resistances to the upside than there are supports to the downside. So I much prefer scenario number one, but I'm just going to leave it there for you guys to decide which one you want to go. In terms of risk reward ratio, just keep in mind if this is going to be capped off at 1.04, it doesn't make sense because you're risking 4 times than your potential gain. So think about it. we can't wait by watching the World Cup. See, that's the thing, right? I'm not really a soccer fan or anything like that, so I'm not into football, soccer. So yeah, I'm up here working, so don't worry. Okay, so that's a Euro USD, pretty detailed, pretty good. Yeah, we spent about 20 minutes in there. This is more as a baseline for stuff. Next up, we can take a look at the Pound USD. This one here is also still within range. We're slightly below 1.2, but we're not really below 1.19. This is the established range between 1.19 to 1.2150 on the Pound USD. Now, if we take a look at Sterling, this is again hovering at around 1.2. Right, this was Monday's trade, right? This one is done and dusted. Some of you probably gone even lower than this. In any case, if you still have that position on the Pound USD, then it's time for you to start moving your stop loss to 1.2050. You're not locking in a lot, but it's completely up to you. Now, on the Pound USD, same scenario with the RSI here. Stochastic is still pointing up, not a big deal. The RSI, it's not really exceeding 60, so if it doesn't go back up above 60 on the RSI, then it's likely going to maintain that downtrend on the intraday scale. The Pound USD, it's probably going to be a little bit easier for you guys because we are within that range between 1.2 and 1.1950 and 1.2050. You actually have a smaller range to work with. It is still going to be about 100 pips if we take the high and the low here. So you got a couple of breakout scenarios. Unless you're trading really short term, like 15 minutes time frame, then you actually have a different potential scenario on this one here. But right now, if we are looking at it from the hourly perspective, you need to be cautious about this current range. We've got a range, and then we've got a smaller range within it, and that smaller range is still 100 pips. The bigger range is 250 pips. So this is 1.1950 to 1.2050. We've got 1.2 as the pivot for Pound USD. So this is 50-50, all right? If you got a couple of choices here, if you're going to be trading on the US breakout, you actually have a smaller entry on this one. But if I'm saying this on the hourly time frame, then any hourly close below 1.2, I would probably go even lower than 1.2 because technically we have a little bit of a range here, there, right? If it does break to the downside 1.2, then your risk reward ratio is exactly going to be about 1-to-1. You're looking at around 50 pips up and down on the pound USD. So I don't like this. If this one goes above the Ichimoku cloud, your risk reward ratio is going to be different as well. So this is one scenario. All right. If price maintains the position above 1.2, now how do we know if price is actually going to maintain the position below 1.2? So we cannot actually look at it from the hourly time frame. On the hourly time frame, the one thing you can look at is this: if price breaks above 1.2050, then that's probably your cue to go long. The thing is, if you are going to go long on that one, your stop loss is going to be below 1.1950. In terms of target level, this is a little bit unknown because we still have to look at 1.2150 as your potential resistance. Beyond 1.2150, the next one is going to be 1.23, but we need to overcome 1.2150. Risk reward ratio is very close to 1-to-1. But do you want to go 50 pips as your risk, 50 pips as your potential gain, or do you want to take 100 pips as your potential gain or 100 pips as your stop loss? That's the risk if you want to go long on the pound USD based on the hourly time frame. Now, because we are trading within the wick, there's actually going to be a potential opportunity if you look at it from the 50 minutes time frame. Okay, because right now you actually have a small range to work with, and you can actually trade this intraday wise. It's not a huge range, it's just here and there. That would make it, that's going to be your box, right? In terms of range, it's about 50 pips, 40 pips, right? So if the 50-minute time frame closes below 1.2, there is a potential for that breakout to happen. There are two potential entries on the 50-minute time frame. Either there's a 50 minutes close below 1.2, right? You could go short having your stop losses there, which is going to be amounting to the same stop loss on the hourly time frame. All right, and then your potential target is still going to be 1.1950. That's pretty much it. So we're not really inventing something new. We're not creating a new range. There's just a potential breakout opportunity on the 50 minutes time frame if you want to take it on tonight. And the probability, it's very similar to the Euro USD. It's a potential for a stronger US dollar leading up to Jay Powell's speech tonight. Okay, that's likely going to be the sentiment going forward until he's done talking tonight. So Pound USD is not attractive to me at this point in time. It's just too flat. We are, there's a stronger support and resistance on either side. So we're in the middle. The risk reward ratio, I don't like it. Unless you do your trade with 1.1950 and price closes below the Ichimoku cloud, then you can adjust this lower right now for the pound USD to 1.19. This makes it attractive, but there's a lot of other factors in there. We need that driving force. You need to take that initial jump. Your risk reward ratio is going to be about 1-to-1 on the pound USD. Okay, so is it worth taking? I would say it's worth taking if there's a breakout of the range. If there's no range breakout, the blue box here, right, between 1.2030 to about 1.1985, if we don't have a break out of this range, then I'm probably going to leave pound USD alone. You will see a breakout. This is such a small range. You will definitely see a breakout. The problem is, when does that breakout happen, and can you actually react to it? If the breakout happens during Jay Powell's speech, I would say Stay away from it. Don't even look at it. Okay. So that's the pound USD. Pretty much done and dusted for the pound USD. It is a little bit flat. If we take a look at the momentum here, I much prefer to go for a short on the pound USD at this point in time. We could still use this fib if you want to. Right, that's still going to give you a good fib. Right now, we're just pulling back to about 38.2%. We are already below 78.6%. So if it does break lower on that 50-minute range, we could actually see price go towards 1.19, because 1.19 is pretty much at 127.2%. So I like a short. I just cannot give you that confirmation right now on the pound USD. All right, let me go through the questions. All right, do we see a bullish divergence on the dollar yen on the daily time frame? I don't actually. We cannot really consider this as a bullish divergence at this point in time for the dollar yen. In terms of the dollar yen, I think we already talked about this. We really do have a strong support at 138. If there's no daily close below 138, we cannot confirm that the dollar yen is, is reversing its trend. Unlike the Euro USD and the Pound USD, that's a different thing. But as I say, the yen crosses and the dollar itself a little bit disconnected. Yen crosses and the dollar pair. They're a little bit disconnected. So for the dollar yen, independently right now, we need to see a break below 138 on the daily time frame to confirm any push lower on the dollar Japanese yen. Until then, this is going to be range bound between 138 to 140. Range is again 200 pips, pretty much the same like the euro and the pound USD. But yeah, I'm not looking at any divergence. You might notice this as a potential divergence. All right, because price, continued to create a low. Stochastics slightly higher, but this is not really a full cycle in terms of whether or not we want to call this a divergence. So keep that in mind. Also, if I were to zoom out, you cannot call this a divergence because we're technically still in an uptrend for the dollar yen. Okay. So yeah, pound USD keeps bouncing off 1.1950. Do you think it'll be able to break it and test 1.19? Just as I discussed, I think there's a higher probability for that to happen. Saw a little gap on US30 on Monday. Do you think the gap will be filled? So I'm going through the questions. I think there's someone asking for oil as well, but we'll go through that one by one. Yeah. So US30. Gap on Monday. Let me see if we can pick that up. 30, 28, 28, 27, 28. I am not seeing that gap on the US 30. With 2022 almost over, you would have more time to rest. I will. It's just a really hectic week this week, sorting things out. But yeah, I'll be taking my leave starting from next week. We have a session on Monday, but on Wednesday next week, I'm taking a break for, I think if we count it, it's going to be 2 weeks. Do you look over monthly time frames since candles was closed today? Not really. I don't really jump onto the monthly time frame. If I were to look at the monthly time frame, I would only do so to show you an example of stuff, or if I were to hold a position for years. Because if I go onto the monthly time frame, it's irrelevant to what we're looking at right now. US30, check 1 hour, there's a gap. I am looking at the 1 hour time frame. Look, depending on the data provider, you might look at that gap, you might not look at that gap. So unless you're talking about this gap here. Okay. Right, this one here. Could that be the gap you're referring to? I'm not too confident on the US 30. Again, for the same logic right now that we are waiting for J. Powell to say something. I think the sentiment right now here is that there's a probability it could actually turn bearish. And if J. Powell says that, or he didn't mention anything about slowing down the pace of interest rate hikes, that's a dangerous thing to speculate on tonight. Okay, I don't know what he's thinking. One thing for sure, he's going to say that one CPA data is not going to be enough to determine that they need to stop hiking rates. He will say that they are going to continue hiking rates until they can bring down inflation to 2%. The two other possible things he could say, it's one, if he says that data it's enough for us to potentially slow down the pace of interest rate hike, this is going to be dollar negative. Okay, the US 30 would jump up, Euro USD would jump up, the pound USD would jump up. Okay, but if he didn't mention this and he only mentioned the first two, then that's going to be dollar positive. So be careful about tonight. And I think a lot of people don't know what's going to hit them in a few hours time. I'm very sure that a lot of people don't even know what's likely going to happen. So you guys jump in here. Probably good thing. Get yourself prepared that in about 5 hours time things are going to get shaken. It really depends on what he says. So it's going to be tough. If you're going to be trading within the day today, your range are going to be small. Your potential risk reward ratio, it's likely going to be minimized. Okay, just make sure you are trading with stop losses. And I don't know what volatility J. Powell's speech tonight is going to trigger. It might not trigger anything because we are pretty much at year end. But if it does, with such a low liquidity in the market, it might create a huge spread on your side. So be cautious for tonight. Euro USD is done. We spent about 20 minutes on that. All right, let's request. Let's line it up. Let's be fair. Someone already asked about oil. Let's talk about oil first, right? So oil, there was a little bit of a concern on oil on Monday, especially on that China protest on COVID lockdown. Eases up a little bit because the government kind of gives in and says, yeah, you know what, they might ease up on the COVID restrictions. So we saw a little bit of a demand coming back for US oil. On Monday, we were looking at, I'm assuming that you were here on Monday, otherwise you wouldn't be asking about oil. So oil on Monday, there was actually this. Sorry, let me just get it back here. So yeah, this is what's being observed on Monday. There was actually a little bit of a block here. I prefer to go in for a short if there was a break, and then that short was towards 72. This doesn't trigger on my side, but if you guys trade the other side and it does trigger, then you would probably be long oil right now. Just be a little bit more cautious because we do have 80 here looking back. Okay, so intraday wise, we need to overcome 80. If we can overcome 80, then it opens up a little bit higher. We might see 82. Okay, that's going to be your next level if price breaks above 80. But if you're thinking, it's time to buy in right now on oil, I would say it's a little bit too early. I know we picked up oil last year around November, but for this one, I would actually hang on a little bit. I need to see a lot more confirmation on this one. Last week, was it last week? It was 21st of November, so about 2 weeks ago. No, it was last Monday. So last Monday, it actually bounces off 77. It was capped at 82. So 82 is going to be a level we need to keep an eye out for. This was October low. That's what capped the market last week. Okay, if price breaks above 80, then we still have to face 82. Only a break above 82 would give further strength on potentially holding oil for the long run. I wouldn't be holding oil for the long run until we actually transition above the Ishimoku cloud at the very least on oil. Okay, so I don't mind oil. I don't think I need to rush in on oil if I were to hold it for a long period of time. But if you're asking oil on an intraday scale, then you need to watch out for 82 as your potential resistance. And if you're thinking, okay, I want to go long on a confirmed close on the early above 80, then your stop loss, the first one, it's going to be at 78.38. I much prefer to have my stop loss around 77. Gives it a little bit more room. But take a look at the risk to reward ratio. Unless you're really having a stop loss around 78.50, that's still okay. But if you adjust it to 77 to give it a little bit more room, then your risk reward ratio is not going to be 1-to-1. Not saying that you cannot trade oil. You can trade oil. It's just not to my style. You might like it as an intraday trade on oil. Just make sure it stays above 80 for a prolonged period of time. An hour or two above 80 doesn't mean anything at this point in time. So you need to be a little bit more cautious with US oil. Okay. Now, if we take a look at the RSI and stochastics for oil on the early time frame, there are potential risks of this one dipping down a little, because if we take a look at the fib, this is going to be the fib that you are going to be referring to. There are limits to the upside. 127.2 is going to be about 81.58, very, very close to 82. So if you're already long on oil, then yeah, you can go for that 127.2. You can go for that 82 level. But as long as it's able to stay above 80. If it's not able to maintain a position above 80, then we could actually see price pull back down a little bit. I'm not saying it's actually going to reverse anything, but you are likely going to be looking at potential support here, basically around 77. So if it fails at 80, you might actually see price move back to 77 before it attempts to break and test 82. So there are risks involved with oil. If you don't trade oil, if you're not familiar with oil, I would say stay away from oil. It's a completely different thing. You cannot just assume that, yeah, you know what, oil is just like any other things. It's going to be okay. It's not. There are visible factors that's going to be affecting oil. Anything on the COVID lockdown in China, that's going to trigger demand for oil, right? If the COVID lockdown is being prolonged, that's going to be negative for oil. If the protest starts getting worse again, then that's also going to be negative for oil. The only thing that's going to be positive for oil at this point in time is if China says, yeah, you know what, we're sorry, we don't want to do that zero COVID policy lockdown anymore, then that's going to drive oil crazy. But if that happens, then I don't think we need to rush into things. It's not going to be too late to hold long-term positions on oil. All right. All right, next up, it's gold, and then we'll take a look at the sterling yens and stuff like that. So here's gold. It's pretty much done at this point in time. We have the potential support for gold building up. What's the current situation on gold? I still don't like gold at this point in time. If Jay Powell says they're going to continue hiking rates, I just never find gold attractive again, but what's there for me to say? So the head and shoulder here, if you guys were on that trade, get out. I think we're done there. In terms of potential resistances on gold, you actually need to dip in a little bit lower. So we will take this about 1767 or 1770. It's up to you, right? You can use that as your immediate resistance for gold. Now, if we were to zoom in on the hourly time frame, that's not really too far. Okay. Shorting gold at 1770, it's different from shorting the Euro USD at 1.05. 7070 does not hold that much of a significance in terms of gold as a resistance. It's unlike 1795 or closer to 1800. That's going to be a lot more, a much more significant resistance for gold. Now, if you take a look at gold, sure, if there's a rejection at 1770, you could potentially go short on gold. Once the stochastics crosses over, we loses a little bit of a momentum, then yes. But keep this in mind. If we take a look at the Ichimoku cloud, it might be above the Ichimoku cloud, but it is actually rather flat. Okay? What I'm trying to say is, if price does get rejected at 1770, then it would just whipsaw back to about 1750. Okay, but that's a huge risk. If you take that short, that's going to be a huge risk, because in terms of stop loss, where are you going to place your stop loss? If you counter whatever the hourly time frame is going to be doing, if you short at 1770, if you think this is going to fail there and you attempted to go short, your stop loss needs to be at this high here, which is around 1786, right? Where are you going to target this? Are you going to target it back towards range at about 1730? Yeah, if that's going to be your gameplay on gold, then I think that's okay. But make sure you have a stop loss. Not really too keen in terms of where it's likely going to go on gold. I don't think it's going to go all the way up there, right? I think it's still very hard for it to overcome 1770. So I would say wait for gold to test 1770. If it fails at 1770, then you can go for a short with a stop loss at about 1786. That makes sense. But if you're thinking, I would want to go long right now on gold, I don't like that. Your stop loss is going to be here. Where are you going to be targeting this? You are going to be targeting this to what, 1795, right? While we actually have a resistance just $6 away. So risk reward ratio, if you want to go long, you're risking twice. So I don't think it's worth it. I would prefer to wait for a rejection, a confirmed rejection on gold. And I don't think there's a need to rush on gold. Okay. I don't really think you need to go for that 1770 level. You could wait a little bit lower if you want to. Risk reward ratio on this one is pretty huge, right? You got 2-to-1 risk reward ratio. So if you lower it down to about 1-to-1 risk reward ratio, any close below 1750, that would still be okay. And then your stop loss would be at this high there. See, it's a much better look at gold. So I'm not the type of trader to just open a position once price reaches a certain resistance. I would really want to observe if it fails or if it's going to go up higher. So I would wait for the confirmation on gold. At this point in time, it is flat, just like the Euro USD, just like the Pound USD. And if you have a position running into the speech tonight, then you need to be prepared. Simple as that. Don't trade tonight without stop loss. That's one. Don't trade tonight if you assume that there's not going to be any volatility. I think there's going to be volatility in the market. In terms of liquidity, I'm not sure if liquidity is going to go bad. I'm not sure if spread's going to widen, but just be prepared. We assume that could happen. Okay. If oil's hawkish tonight, isn't oil going to go to the downside? So I think we talked about oil on Monday in terms of the correlation with the US dollar and stuff like that. The dollar went down on Monday. Oil went down on Monday. Oil is currently driven by something else. Obviously, that's everything to do with China at this point in time. Would demand for oil, so would US dollar go down? It might falter a little bit. Now, in terms of oil, intraday wise, we are still looking at potential resistances around 82, right? It might not even overcome 80 at this point in time. So could US go down? Yeah, it could oil go down? Yes, it could. It's just that if it goes down, as I said, it could go back down to 77 before it potentially attempts to break higher. Okay? So I think we just discussed this on oil. All right? We just discussed this. So gold's answered. Am I seeing a flag on gold daily? Let me see if I'm seeing a flag on gold daily. I don't. I know what you're looking at. You're probably looking at this and you're calling it a flag. A bearish flag would only happen in a downtrend, so it cannot happen in an uptrend unless you're referring to this as a potential flag. It's a little bit too early to call this a flag. We are still about how many periods in? I wouldn't call this a flag. We're still 11 bars in, but yeah, we need further confirmation on this one. Wouldn't call this a flag yet. It cannot be a bullish. It could be a bullish flag, but we just don't have that rhythm going on the flag. We cannot call this a bearish flag either because we are in a technical transition to the upside for gold. Okay, so it is a little bit flat. Sorry to disappoint, but that's my view on gold. Not really huge on it. Euro USD done, sterling yen done. Okay, good. I got a short position in dollar CAD. I'll take a look at Aussie New Zealand in a minute. Gold, brother, silver. Okay, let's take a look at silver. Let's start with the daily. I think silver is something we don't really touch a lot. It is a little bit flat. I would probably call this a pennant at this point in time. I think we are within a symmetrical triangle. But let me just draw and confirm it. Yeah, so we are within a symmetrical triangle for silver, at least on the daily. In terms of key support for silver, I wouldn't put it at 2050. Yeah, I would still leave it at 2050. Is it a strong reversal on silver? I don't think so. Can it go down even more? I would actually keep this as your reference point at this point in time. Sorry, let me just build this up and then we can go on to the small time frame and then you can figure it out. So this is basically what silver is in terms of an intraday look. Silver on an intraday look, it's choppy. You are actually going to get diminished range for silver. Should you be trading short on silver? It's basically on the same logic with what we saw on gold, that it's actually above the Ichimoku cloud, number one. It would actually still obey this fib here. All right, we're being capped by that 100%. If it does goes higher, then it's actually going to be capped by that resistance channel that we have on the daily. It's going to be capped at 127.2% at 2180. So I will take away 5. So 2175, right? That's going to be your key resistance if it does break above 2160. I haven't touched silver for 10 years. So yeah, not really a guru or anything on silver. So, but if you're trading, if you want me to take a look at silver here, do I see the potential for this one to go higher? Yeah, I think it could, but it could be capped at about 2180. So keep that in mind for silver. The other possibility is that, if you want to attempt to go short on this one, you could. It's just that the momentum is not on your side right now for silver. Even if it does go down for silver, you need to keep an eye out around 21.25 to about 21.30. Okay. The problem with this one, if you go short on silver, you need to have a very tight stop loss, which is around 21.70. You could target around 21.30 if you want to for silver. Not too familiar on silver here, but yeah, if that's what you're looking for. If you are planning to maintain a long position, then I'm okay. Start adjusting your stop losses. But if you're thinking you want to go long on silver, then you actually need to go long once there's a breakout above 21.60. In terms of risk reward ratio, it's not going to be great. So keep that in mind. How many bars does gold have to create before it could be considered a bullish flag? Okay, so let's talk about flags. I think I'm not sure if we've done a session on flags here, but there are actually rules to flags to follow. So I'm assuming, let me just start this somewhere a little bit plain without anything on it. Okay, so let's go to I'll clear everything. So we just want to focus on the flag, right? So the question right now is, can we identify this as a flag? Like so. Yeah, can this be a flag? For flags, there are actually limits, and your limit is actually going to be 20 periods. So from the very beginning where it started, which is going to be the first significant high that you look at, you actually have 20 bars. Anything beyond 20 bars is no longer considered a flag. It's actually going to be considered a descending channel beyond that 20 bars. Now, within these 20 bars, we basically need to see a few things. We basically need 1, 2, at least 3. So yeah, 4 points to start with. We got 1, 2, 3, 4. Right. The fifth one is basically going to be where it's actually going to break. Okay, this is the ideal flag. At least we are getting this 1, 2, 3, 4. All right, we got the 4 points. So at least we got A to B, C to D. We have that, then we actually have a much stronger case for a potential flag. Obviously, the break would be on the break of this. Sorry. Oops, sorry. There we go. All right. And it's going to be capped at 20 bars. So it's a little bit too early to call this a flag, just because we don't actually have price bouncing in and out of it, because we only have A, B, and C. So we don't technically call this a flag, because if C goes higher, then you don't actually see a flag anymore, right? You're actually looking at a potential, you're probably looking at a potential ascending triangle if C was there. Okay, so for a flag to happen, there are rules to follow, obviously. So this would be the ideal flag. That's kind of the minimum bounces it would need for you to actually confirm it as a flag. So that's pretty much it. If we don't have a point D, how are we going to determine that price is actually going to do that? Okay. So we need to understand this. We just don't assume 1, 2, and then we call that a flag, because C could, if C goes up higher, then it would be something else. Okay, hopefully that makes sense. Okay, so last one for tonight. I'll take a look at quickly on the Aussie New Zealand, and then I would jump in on the last question on the position. Aussie New Zealand, to me, on the daily time frame, looks very disastrous. I think we could potentially be identifying 1.0750 very similarly to 1.05 on the Euro USD. Okay, so that would be your base on the Aussie New Zealand. if you attempt to go long on Aussie New Zealand right now, make sure your stop losses are very, very tight, not too far away from 1.0750. If you take a look at it from the hourly perspective, it is rather choppy. So basically, Aussie New Zealand to be tradable needs to go out of this box here. Right? So very similar situation with the Euro USD and Pound USD is actually flat pretty much. No way for you to determine any trend direction on the Aussie New Zealand, even on the hourly time frame. Let me just clarify a few things. If you take a look at the Ichimoku cloud, the Senko A and B keeps crossing in and out. It's going to be a bit flat going forward. Range is still pretty much there, unless there's a range breakout. For this one, it's pretty easy. To the bottom, we basically need to break above 1.0750. On the top, we basically need to break above 1.0825, just 25 points above 1.08. Okay, so that's pretty much the range. And that's pretty much it. Is that a huge range? I don't think it is a huge range. That's just about 75 pips of range. That's predetermined on the Aussie New Zealand. So I wouldn't take any position until we actually see price breaks above 1.0825. If it does that, then I'll much prefer to go long, just having my stop loss at 1.0750. If it breaks below 1.0750, then you're actually opening up yourself to a lot more risk, because there's a lot more unknown to this one. Because if we take a look at the historical view on the Aussie New Zealand, we know 1.0750 is going to be a little bit tough. If you want to identify potential support, you're going to be faced by this 3 levels as your potential target levels, and they're not really huge, right? Still going to be about 1.07. It's going to be there every single step, every 25 pips until 1.06 on Aussie New Zealand. Okay, so that's Aussie New Zealand, very quick and easy. All right, let's take a look at dollar CAD, and then we can wrap it up for tonight. Right. No worries. I'm here to answer any questions you guys have. Okay, let me clear off a few things on the dollar CAD. I think we are a little bit too messy here. Okay. I've got a short position, 4-hourly time frame. Let's take a look at the 4-hourly time frame. A 1.357, stop loss at 1.36. 1.357, 1.3650. Because there's a trend line resistance rejections in the 4-hourly time frame. Okay, I'm just looking at that trend line. If it's a daily trend line, then yeah, but on the 4-hourly time frame, you will actually not be able to pick up this trend line. Unless you're looking at this. This is not a really valid trend line, because you still need to look at that high over there. If you take that trend line, then yes, that would be a valid trend line. I actually don't trade based on trendline rejections, because if you do that, it's basically trading off bouncing supports, a support trend line. As I always say, if the market goes in one direction and you try to short it or go long on it, it's really like they call this catching a falling knife. So I don't do that, just to clarify. If we take a look at the 4-hourly time frame and you already went short on this one, a short position dollar CAD at 1.357, stop loss on the time frame because there's a trend resistance. Can my stop loss be just to break even point? Okay, let me just get your trade here. 1 point. Okay, yeah, your stop loss is at 1.3650. Which is this high. Yeah, I get that. Okay, your target level, it's going to be at 1.3450. Okay. Can your stop loss be adjusted to break even? It's really up to you. It's really up to you at this point in time. I don't think it's that much of a huge gap. I'll be honest, leading up to J Powell stuff, then yeah, I much prefer your stop loss to be at break even point. But again, that's going to be your decision. I don't know how strong it's going to go down, because the argument for this is that you saw a resistance trend line, then on the volatile time frame, you actually do have a potential support trend line. So that's always going to be something, right? I'm just bringing this to your attention. There is a potential for a support building up at 1.35. When your target, it's going to be at 1.3450. So yeah, if you don't want to have any headaches, then move your stop loss to break even. I would say that's probably not a bad idea ahead of the J Powell speech. All right, since you won't be here next week, do you think I can go long on pound USD if it does break 1.1950 and bounces off 1.19? I'm still going to be doing the outlook, so don't worry. I'll still do the outlook on next Monday, so that's still going to be there. Don't worry about it. Telegram channel, I'm still going to give you updates, so don't worry about it. We're just not doing the Wednesday session live. That's all. If it bounces off 1.19, can you go long? No, technically, no. See, here's the thing. If it breaks below 1.19, I don't care if it breaks 1.1950, because the key level to watch out for is 1.19. If it breaks 1.19, it would actually trigger that correction that I was looking for that we actually don't see, right? We're still going by this fib. If we have that correction, then we could potentially correct itself to 50% to about 1.1650. So don't attempt to buy off support or sell at resistance without anything strong going for it. Okay? If you don't have the momentum behind it, don't go against it. Right now, if you want to go long, that's an okay thing, but 1.1950 and 1.19, you don't even need for me to be here next week to tell you that we could still potentially lose these levels this week. Okay, so don't just, it's only 50 pips, and if we take a look at it on a daily time frame, 50 pips, it's nothing. We are really stretched out thin sideways market, and that was the warning that I gave out on Monday's outlook, that we could be in for a sideways market condition. Either side breaks, therefore I would look for a potential break below 1.19 or a potential break above 1.2150. That's where I would look at initiating a longer term trade on the pound USD. So I think that's going to be what you're referring to, because at this point in time, if you don't need for my session next week to figure out can you hold long position and stuff like that. We are still within a range, so a little bit too early to call that. Okay. All right, sir. Please, 4 hour look. I don't know what you're referring to. 4 hour to look for what on what. Anyways, you guys were here. Talk to you about the potential volatility tonight. If nothing happens tonight, awesome, great. Then we will wait for the employment numbers. Again, I don't think the employment numbers is going to mean much. Okay, but NFP doesn't mean much. I would be more focused on the unemployment numbers. We got a surprise drop on the unemployment from 3.5 to 3.7%. So this month we'll be looking at unemployment numbers. The NFP numbers, I don't really care too much. Out of this week, I really care about what J Powell says tonight. Okay, depending on where you're from. Okay, so I think that's what's key this week. Okay, we've got the Eurozone CPI. The numbers was a little bit of a mixed bag. I already explained what it is. If you guys missed it, replay this session. We spent about 20 minutes talking about the Euro USD and stuff like that. The Euro USD could go up. Potentially. Yeah, I already give you the risk there. If it does go up, you need to keep an eye on 1.04. Okay, the other option is this one here. We will need to have a confirmed close below 1.0350. At this point in time, I wouldn't hold a position until I have something pretty definite on this one. Just keep in mind, if it goes up, your first resistance is going to be at 1.0450, next one 1.0450 before it even goes back up to 1.05. Okay, so think about it. That's why I have this there, because your initial risk reward ratio is going to be 3 times your potential reward. All right. Okay, that's a wrap, everyone. Good luck with the trades. I'll see you Friday for risk management. Other than that, I'll see you on the Outlook next Monday. I'll post an update on JPowell stuff on the Telegram channel as well. Okay? Good luck. See you soon.